Okay, good morning, everyone. I hope you all enjoyed the Deal Makers dinner last night. I certainly did. I was sat next to Jean-Marc from, well, he needs no introduction, and also Jeff Packer from HeliSpeed. So sandwiched between the two of those, they really know how to silence a lawyer. I think I got 3 words in during the evening. Yes, agreed, very interesting. Oh, 6, I got 5 words in maybe. But no, joking aside, I had a really great time. We spoke a lot about the helicopter industry, about all sorts of different things. So today we're going to move to the funders, to lenders, and also a lessor. We've got with us on stage today Mirika Nakayama from ITC-AeroLeasing. Got John Heskin from CIT. We've got Andy Blundell from Close Brothers and Shaun Pickering from NatWest. I'll let you guys introduce yourselves a little bit, and then we'll get right into the thick of it.
I'm very nervous, so if we could start from the other end.
I'll start. So hi, John Heskin. I am the business leader, group head of the Aerospace and Defense Finance practice at CIT. For those that may not know CIT, we're about a $50 billion bank based in the U.S. We're a full-service, mostly middle-market type bank. The group that I lead focuses on lending to companies in the aerospace and defense supply chain, as well as to service providers in the space, as well as we lend to investors and lessors in the aviation market, focusing on fixed-wing assets, helicopters, engines, and spare parts. And I've been at CIT since 2007.
Okay, thanks. Let's go to Andy then.
Good morning, everybody. My name is Andy Blundell. I am the Managing Director of Close Brothers Aviation and Marine Finance. Close Brothers is a London-based bank on the FTSE 250. Recently celebrated its 150th anniversary. The aviation business at Close has been trading for just over 40 years, and we are the only bank, I understand, in the UK to have lent every single year since we started. The portfolio itself is split pretty much 50-50 between aviation and marine, and we cover a wide spectrum from your private flyer all the way up to business jets and offshore helicopters.
Thanks. And Shaun?
Good morning, everyone. My name's Shaun Pickering. I'm the Aviation Director for NatWest. You might be more familiar with our Lombard brand in this particular space. So my role, I sit in the structured finance division of the bank, and I undertake asset finance activities in aviation, and that's fixed wing and helicopters. In helicopters, we've been in this market for a long time. We've been a lessor, but more recently we are a debt provider, and we deal with the main operators and the leasing companies.
Thanks. And Mirika?
Okay, so I'm a bit nervous of sitting with all these gentlemen of large banks. We're a family-owned leasing company out of Japan. We were founded
Yes.
founded in 1985, and we started the lease business in 1989. We lease generally in general aviation sector across the rotor wing to fixed wing. Our portfolio at the end of March is going to be 60, with quite a lot of transaction happening in March. So I'm very much honored to be here.
Good, thanks. I think we're going to have a very interesting session with, different aspects, different views from the panelists, and it's interesting because it is a mixed bag out there. It's from what I've read and from what I've been listening to people speak over the past day or so. It's kind of better now than in the past few years. So it's better, but not as good as the pre-offshore oil days, oil crisis days. Some Chapter 11 cleansing has taken place. Is it over? Yes, maybe. We've read about Babcock writing down £85 million on its aviation segment, but Honeywell is predicting increased deliveries for civil aircraft, for civil helicopters. So, and at the same time, Airbus announced deliveries fell in 2019. So it is a mixed bag, but on the bright side, I read a market report that predicted growth from 31 $31.5 billion in 2019 to $37.4 billion by 2025. So a consolidated annual growth rate of around about 2.8% during the period. And by application, the civil and commercial offshore helicopter segment is expected to grow at the highest rate during the forecast period. North America is projected to lead the helicopters OEM market during the forecast period with a growth rate of 38%. And Latin America is predicted to grow at 3.5% of consolidated annual growth rate. So also we see there's distinct interest from new investors coming into the space. LCI was able to attract new lenders. So there's a lot to distill from that, and I'm going to ask the panelists to give us their views on what these facts mean to you as active players in the helicopter market, particularly for Andy, John, Shaun, what this means for you as lenders and for you, Mirika, as a lessor, all right? And what this could mean for potential new players should they be coming into the market, what risks there are there any lessons learned from the past few years? So when we had our prep call, Andy, you mentioned that a lot of it now is going back to basics from a banking perspective. So at the heart of it, I guess, is looking at the credit, the analysis. Could you walk us through what this means for you and what you do? What you're
Absolutely.
doing now?
I remember the first helicopter investor conference I came to several years ago, and one of the questions was asked was, are the banks asset lenders or cash flow lenders? And I think the reality is you have to be both, because you can't rely on one or the other. You might rely on one a bit more than the other, but you really need to understand the fundamentals of both. Otherwise, you will get caught out, in some respect, eventually. In the case of Close Brothers, we have always financed UK-based air ambulances, utility helicopters. So moving into the offshore space was something extra that we did. It wasn't a massive play to enter the market and lend X $100 million into that space because the space was attractive. It was more a case of, let's look at, as you say, the basics. Let's look at the counterparty, where the cash flows are coming from, how much we're being asked to lend against the asset, what we think it's worth, and really start from those fundamentals and then build the case from there on, rather than just thinking it's a great sector, let's do it.
Okay, no, thanks for that. And I guess you're looking at the smaller helicopter segment, and you're a regional lender. Let's hear from John as to whether
we say smaller, but we just to clarify, we have a number of R22s on the books. I've got some 139s, 175s, so I've got the whole range.
So I'll also start off with a memory of my first heli investor several years ago. My thinking has changed dramatically, I think, over this period. And so now I think we're talking about credit fundamentals. And so I like to work backwards now in the sense that, also, given my background and what we do, we're cash flow lenders and we're also asset lenders. But on the helicopter side, I'm very limited in what I can do nowadays, just given the market disruption. So I tend to work backwards from what are the assets that I think I could finance? What are the helicopter platforms I think I could do? And that's based on how liquid the asset is, perceived liquidity, how many operators operate the particular type of aircraft, how many aircraft there are in the general population, that kind of thing. And if I view the market as somewhat more liquid, then I'll target those assets. Then I'll work backwards to the credit question in terms of how strong are these counterparties. So, and then I'll work, the next step is asset management. So, okay, how do I protect the asset value given use and things like that? So power by the hour, maintenance reserves, those types of things. Making sure that the lessee knows how to redeploy assets. All those fundamentals. But I'll also say, just a general comment, is what we'll do now is within a few turns of what we used to be able to do in terms of, hey, I used to be able to lend 80% against a helicopter. Based on what's happened in the market and losses that occurred at certain banks, now we're, dial it back a bit. So higher credit quality and better structures is what I can do at this point.
Okay. I was going to go to Shaun, but Mirika, I think you wanted to interject here as regarding operators, right?
Yeah, I think as being the solo sort of, a company focusing on operating lease, I think in addition to the method that you have described, our company also look at the competition within the sector in terms of market participant from the lender side and lessor side. We decided not to be active on the offshore sector when we started to see rental factor being, in our view, like absolutely low. We couldn't justify that. We couldn't understand that. And I remember like pitching to an operator, and then the operator started laughing, and then they gave me the rental factor that was so low. And I said, "Are you sure about that?" And he said, "Well, no, I'm not sure how they're going to recover the money, but who cares? We're getting a good rate. ITC, can you compete with that?" And I'm like, okay, well, I don't think I can, you know. So now, like, in a sense, with the banking sector sort of deciding and revisiting what to invest and what not to invest, we actually were very much excited this year and going forward, because we now see more opportunities. We now see more operators willing to contact us and consider us as a potential source of aircraft financing. But at the same time, we're a little bit worried, and we wanted to gather the information from this conference that where all these lessor or banks gonna target next time, you know, going forward, because I don't want the market, you know, the bubble that we saw in the offshore industry to now shift to EMS and shift to some other utility, and then in the end, you know, the pain never goes out of the industry itself, you know.
It's interesting. Can you talk to us a little bit about your capital structure? Because I think what you're saying is that you don't have any bank debt right now. It'd be interesting to see how you're funded at this point, and then we can take the discussion with bankers.
So we're a leasing company, but our leasing structure, even though we call it operating lease, essentially we provide the operator with the purchase option. So a lot of operators actually look at it almost like they're buying into optionality of whether return the aircraft or capitalize, you know, at the end of lease term. So I think in some sense they look at us almost like a financing lease, and to that sense they started to visit us with you know, any aircraft type or aircraft age, or you know that, you know, the bank has rejected, or they maxed out on the, you know, borrowing side, and they would like to, they foresee further expansion, but the asset type is not necessarily popular by the larger leasing company.
Okay, no, that's good, thank you. So Shaun, let's say you're looking at a new borrower, a new entrant for you, a new customer for NatWest. Can you tell us a little bit of what you'd be looking for, and what your concerns might be? And
yeah, certainly. I think, and it, you know, echoes a lot of the points that John raised and how we look at transactions. I start with what is the underlying requirement for the aircraft? I mean, what's it going to be used for? And I need to be comfortable that there is a long-term use for that aircraft, and it needs to be used by a you know, credit-worthy counterparty as well. So really, where you know, transactions that are easiest for us to put through our system are one where there's a government or a quasi-government or a social need for an aircraft, like a search and rescue contract, like an EMS contract, where there is a demand for the use of that aircraft that isn't linked to a commodity price.
Okay. And would you have a preference to lending to operators as opposed to operating lessors?
Very good question. And I think if that was asked of me a few years ago, I would have said absolutely we would want to have a lessor in between us and the operator, because they give you an additional equity buffer, they give you the asset management capabilities, you're taking a portfolio view on the operator risk, whereas if you're lending directly, you're 100% on them. Whereas if you're lending through a lessor and they've got a portfolio of clients, if your particular asset lessee fails, they can still service your debt through other leases. So that was how we would look at it a couple of years ago. I think looking at it today with our experience over the last couple of years, I think when you're putting a transaction together, you can't ignore the rest of the portfolio from the leasing company. You're not immune to what are the deals they're doing that you're not financing. Because you are ultimately, if the lessor fails, you're going to get dragged into the process as well. Even if you've got the best lessee, the best aircraft, it's not easy to extract your assets from a leasing company going through a bankruptcy. So where if you've got a really strong operator lessee, you might now be better off doing it directly rather than through a leasing company.
That's interesting. John, do you agree with that? You were nodding.
I think the comment I would say, I do agree with that. I think ultimately I would look for who's the better credit, and I do agree with Shaun before about the cushion you get, but you could achieve that also through the advance rate you give for the particular asset. But I guess the concern I have is concentrations and concentration risk. Concentration risk of, for example, a single operator could have a massive exposure to oil and gas and could fail because of commodity prices. Or, for example, in the U.S., there's a lot of just EMS providers or operators as well. I do like the diversity, and I would be looking for, again, I agree with Shaun's point about, you can't ignore the rest of the portfolio, and you need the leasing company to remain strong. So with that, you need to have diversity of asset types, as well as a diversity to end markets. So that's really what I look for.
On diversity.
Correct.
Mirika.
I wanted to ask this question at this panel, that in terms of age of the asset, what is your kind of view right now? We get a lot of comments through operator side that certain age is restricted, and therefore they still see with the downturn of the market, they can get a lot of used aircraft, so they're changing the policy from getting new aircraft to used aircraft. What do you see any changes in terms of year of manufacture or?
Yeah, so I think it goes to one of Shaun's earlier comments about what kind of contract. And, I think we're looking for a longer term duration of deployment. And so for us, we want to make sure that our loans match the lease terms and things like that, and or at least match the contracts and things like that. So when you have older assets, they seem to move around more than I would say a newer. I might be wrong about that, but that's my view. So certainly a preference for newer. I mean, if you ask me about the fixed wing market, I would have a different answer. But certainly there's certain contracts that prohibit older aircraft. So I think I have a preference towards newer aircraft.
Yeah. Andy, you were talking to us earlier that you had some pretty old aircraft as well in your portfolio, in addition to new.
Sure. I mean, the oldest aircraft we have in the portfolio is 1942, but that's definitely not what we normally do. Just to make that clear. But age is interesting because if you are governed by an age policy, I think there is a danger that you lend to the policy and not to the aircraft. So you need to be, just because it's under 10, 15, 20 years old doesn't make it a good asset. There's a great video at the moment on YouTube. There was I think it's a 10-year-old A380 landed at Knock Airport in the west of Ireland last week, and it's being, I think, parted out. So that's a very good asset for most people, but it ain't flying out again. So we don't just look at the age, and also age and value. If it's 20 years old, but the price that you're basing your funding on is down here, and it's a fully amortizing loan over a short period, why not? Okay. But it really depends on who is it, what is it, why. Back to basics.
So same thing for you at NatWest, Shaun? Or is there an absolute sort of limit to the age of aircraft that you could...
So in a policy terms, yes. I mean, there is an age that we won't go beyond, but we're guided by our internal technical team to support us on that. But ultimately, it's we're looking at more the counterparties that we're dealing with rather than so much the asset. I think the concern for me on older assets is when you're hearing stories of oil companies putting the limit on age on tenders. I mean, that starts to concern you of looking at a potentially older asset that is not going to even be under consideration for tenders.
Okay, thanks.
Can I just go back on one point? The lessor or operator question that we talked about before.
Yeah.
I think you need to do both, because if you're lending direct to operators, you get more first-hand information about the market, you would hope. But similarly, lessors, they've got skin in the game. They have got their equity in there as well. So I still believe that there is a fundamental value in lending to a lessor as a lender that hasn't got a massive asset management capability behind it, because these guys have the expertise and can redeploy far better than we do. I think the danger is that it's all in the structuring, because if you are part of a syndicated facility and you've got loads of different vested interests, loads of assets, then at that point it becomes very difficult to work it out. If you're doing bilateral deals on certain assets, then it makes it a lot easier.
Well, that makes sense. I don't think you guys would disagree.
I would say that even if you're a bilateral lender, if a lessor gets into difficulties, it's not easy. It's
not easy, but I'm not going to be arguing with myself about what to do.
Well, hold on. I think the other point I wanted to make on that is bilaterals for us are, again, a target. You do have more control, though. I mean, if you're in a bilateral, you're not going to be fighting against perhaps other banks that are in the same facility as you. They might have different interests in different, other facilities of the same borrower that's having issues. So if you have a single bilateral, you can you have more control over that particular, albeit there are complications with that, but I think this is a preference for us at this point.
Okay. Did you want to?
No, I found all your statement very interesting. Us, like being a leasing company, I think we don't have all these, regulation on the regulatory capital issues, etc. So we have the privilege to sort of work with the older aircraft or less liquid aircraft. We have, for instance, one of the oldest aircraft is 1976, and it's an L1, and we are very successful of placing that to Japanese operator. So it is a quite interesting project that right now we're working. But I think, from the banking perspective, it may be the big no-no transaction.
Okay, good. Well, let's stay on the operating lease topic then, because as we know, the operating lease market for helicopters has grown tremendously since 2010. And Mirika, do you think that the market is still growing from your perspective, or do you think we've reached a bit of a plateau on the operating lease side? I mean, just in perspective, the helicopter operating lease market is about 15% compared to in the fixed wing, which is hovering close to 50%. So there's that gap. Do you think that the helicopter market will be sort of creeping up and taking more of the market?
I definitely, think that, as you have quoted at the beginning, I definitely think that the helicopter market will grow, but the question is, what is the speed, and compared to, all the capitals available. I think yesterday somebody at the panel sarcastically said that, was the helicopter a good investment to begin with? We believe that it's a good investment, but I'm not sure a lot of capital that joined the market at the bubble time had a 100% understanding of the asset. Because they may have had much stronger theory, sophisticated theory, but they may have never touched, and being on the ground, and sweat with the engineer and then pilots, So sometimes I have to, I was standing outside and one of the gentlemen said that don't be stressed out, just say the truth. Say the truth. That's what you can do. And sometimes I get a bit frustrated because there are other leasing companies with a long history that is in the market, but they do not get recognized. But their understanding of the market and asset are absolutely worth of respect. So I do think that there are a lot of opportunities in the market, but the sorts of people who would seize the opportunities, the dynamic may change. That's what I think, and we hope we can keep up with the changes.
What's your view, Shaun, on the operating lease market? Do you agree with that statement that it's going to be more of a controlled growth?
Yeah, I would say that's fair to say. I don't think we're going to see it get to the levels we see in the fixed wing market, but there is definitely a role and a requirement for leasing companies in this sector.
But where do you see the potential capital coming from, the investors? And I know this is not really the topic for you guys, but any sort of outside views or not really?
Well, so I think, this is an interesting time for investors because there appears to be a dislocation in the market, and this is a time where you seemingly could get in at good asset values in terms of, where they've been historically. So, I think there was mention of some companies that have raised capital, indeed raised capital in this market. But my view on the market is, and echoing Shaun's point, there is a fundamental need for leasing, especially, a high-value, capital-intensive industry. Just like anything else, leasing is important, and we're at 15% now. I think it'll go up. But when we have a scarcity of both debt and in equity, it's going to be more muted, I would say, than anything else. But I see the investments coming in more strategic and more precision-guided than more broad. I don't think you're going to have the same situation where you had with Waypoint and others, where you had, hey, I need, deploy 500 million in 2 years, or $1 billion, or things like that. I think people will be more measured, and with that, they could select the right strategy for themselves versus being broad. And when you go a little bit too quickly in terms of acquiring assets, you tend, especially in this market where a lot of the higher value assets are concentrated with a few operators, you can get yourself into some trouble if you do it. So I think the smart money is being more selective. And also, there's a nice play to be made in the asset management side as well. So leasing companies don't really necessarily need to own all of their assets, but if you make a name for yourself, you could make a lot of cash flow managing assets for other investors.
Okay. Thank you. All right. Maybe, do we have more time, Alistair? Or was that okay? Let's focus on the sector a little bit, or sectors. Mirika, you mentioned that you don't really concentrate on the offshore sector, but that's offshore oil, I guess. Would you be looking at offshore wind farms, et cetera? Because
I think
there's growth of that in Asia, especially in Taiwan. So.
Yeah, no, definitely. I think yesterday, the gentleman who questioned, who asked the question about the wind turbine was actually happened to be my Mr. Nakayama right there. He's my father. Okay. As a company, we're absolutely interested in that sector. It's not that we're not interested in the offshore sector, but given the fact that we're not funded by hedge fund or private equity, we had no means to compete, to large lessor. So going forward, that may change,
Okay. Any views from the bankers as to offshore?
I'll give my views on the offshore market from a bank's perspective. I think if you look at our collective recent experience for assets in this space, and you look at how the industry's structured in terms of the contracts, it makes it almost impossible for banks now to really lend in this space without significant changes. I mean, how can I structure a deal for a brand new aircraft to amortize over 12, 15 years when the underlying contract is 5 years, and they've got the ability to cancel it in 90 days? I don't know how I can make that argument to a credit committee. So it needs to be there needs to be some change and longer term commitments from the end users to make it a bankable solution. And one other thing I'd just raise on the oil and gas sector and something that's probably going to become more and more prevalent over the coming years is lenders' ESG policy, and that's banks and that's institutional lenders. You're seeing a lot of move to make commitments to be supporting a low carbon economy, and that's true with NatWest. Our new CEO made that announcement a couple of weeks ago. So supporting assets that feed into the oil and gas sector, we're going to start seeing limitations on capital because of that reason as well, I think.
Okay. Do you see the same on your side, John and Andy? More focus on ESG, sustainability. We hear quite a lot about it, but is this sector actually, can it hold itself out as being green?
It's an interesting balance because it's clearly only going in one direction. Whether that's because that's where the money's going, or is do you have to be more and more cognizant of shareholders and investors' views about where the bank is putting its money. So it's definitely something which is more and more important in an overall decision. But oil fields don't decommission themselves. You know, they need looking after. Wind farms are very, very big. A lot of oil companies are transitioning into greener things. So it's quite complicated. I think in the short term, they will still need to be funded in some respect. Now, whether that's more on the ultimate end user side, whether that's under the current model, that's still to be debated. But it's probably not going to get any easier. But I think it will definitely still be required.
Okay.
Yeah, I'd say that there is scope to start exploring sustainability-linked transactions or green loans. We've seen it now in the aviation space with ATRs and as being a transition technology or a lower emission. So I can totally see an ability for a leasing company to raise sustainability-linked debt on them, maybe reducing their oil and gas concentration and concentrating more on socially used aircraft like search and rescue and EMS.
I think that's probably right. It's relative, isn't it? There's the absolute sustainability. I think if everything is green, but also it's relatively whether the company is using best practices in the sector.
Yeah, it's funding a journey from a brown industry to a green industry. You know, it's not going to happen overnight. So there is green financing on transition assets.
Yes.
You know, I may be wrong, but I tend to think the utility sector is quite interesting, and also like the firefighting. Those are the sector that, you know, with basically we were one of the first company who reused the EC225 from offshore configuration to utility configuration. So we're very keen to understand how, you know, that sector is going to develop. You know, and there's some discussion, I think, that, you know, maybe EC225 can be used on the firefighting, right? You know, like the demand, you know, like could grow very fast. I think there's some somebody that's going to talk about that maybe later today, I think. But I think utility sector is quite interesting.
Okay, thanks for that. There you have it. I think we'll stop there with this and go to the questions, because I see a lot of questions have been popping up. So to give us time to answer those, let's go in the order that they appear there. The first question, given a preference for diversity and perhaps a renewed desire to lend directly to operators, how do you reconcile that with scaling up in a particular vertical? Okay. You want to take that one, Andy?
Yeah, and I guess it depends what the demands and expectations of our respective banks are. In my respect, this forms part of the overall aviation and marine portfolio, which traditionally has had a high net worth individual base, but is increasingly now looking at more commercial and corporate transactions. So it's very much an add-on to what we already do, as opposed to a big sectoral play to deploy X million, as I said earlier. So that's not really relevant for us.
Okay. Let's go to the second question. Would asset managers without any financial exposure be ideal for the banks rather than the lessors? You were talking about asset managing, John. Do you want to?
Okay. So, I'm not sure I understand the question. I mean,
I guess, would you rather lend to the asset manager than the lessor? I'm not sure that.
I think they're saying, correct me if I'm wrong, but I think they're probably saying that if the lessor have exposure, right, their financial could get bad. So do you want to still lend through the lessor, or have somebody that is only focused on asset management, like fee revenue?
Well, I think historically, most asset managers have had exposure. I mean, if you look at GCAS, for example, so GCAS will sell part of its portfolio and manage it as well. I mean, as long as they're indifferent about how they place the assets, and they don't put a particular, they don't favor their own assets in terms of redeployment, then I'd be okay with it. I think the better asset managers have experience and have had experience with returns and things like that. So inherently, I think that the leasing companies have a leg up on maybe a fresh start asset manager. I mean, if you think about, like I said, GCAS or Willis Engine Leasing, you name it, these are the ones that you prefer to have, at least I would, when we're doing, sale leaseback type financings.
Okay, thanks. The next question was a use of lockboxes. We'll ask Andy about that. What are your views on the use of lockboxes by end users, and how much would their use impact your credit decisions?
Just to scope it right, lockbox in terms of bank account locked, money goes out. Yeah, is that what we mean?
I believe so. I think it's
okay. Right. So
rentals are
if that's the question, it's a great idea in practice. I guess it depends who's paying into the lockbox, whether it's the operator or the oil company, for example, because whilst the chain looks great on paper, there is generally always a point where lots of cash flows go into one pot and then go out that might feed the lockbox. So again, it's all down to the structuring. I mean, I have seen deals in the past where the oil company paid a lockbox directly, but I've only ever seen one transaction of that, which we didn't do. I just inherited it. So I guess it's possible, but probably more challenging in practice.
Okay. And what's your view? Would you agree that it's fairly challenging to get the operator?
I absolutely agree with Andrew, because before Andrew, my bad habit, like I raised my hand before Andrew finished the sentence, but I was rather curious how that is practically would work. We looked into that, but sometimes the operator really need the cash to keep going on with the operation. So I agree with Andrew.
Okay, yeah.
Well, let me just add, so I think there's a way to structure, especially with leasing companies, direct payment into a bank-controlled account, which never, and then you can structure a situation where the company doesn't have access to those funds before principal and interest are paid. But I do think on the operator side, it's almost impossible to get an operator to segregate cash or have cash paid for Shell oil, for example, into a CIT bank account. That doesn't happen. But on the leasing side, you can come up with structures that would work from a lot.
I think that must be right. It's more on the lessor side. The cash flows coming up from the lessor that you'd go sent to the lockbox. Okay. The next question: would you say that overall the level of credit risk of most borrowers on the helicopter market has got better, or has it got worse? Don't know. Shaun, do you want to?
Okay. I mean, over what time period, I guess. I mean, if from...
Well, let's say...
from 5 years ago?
5 years,
Yeah,
let's say 5 years.
Yeah.
You said it's decreased.
Well, I think you could just observe all the bankruptcies and assume that, but I would say the last few months, I mean, it's gotten better, right? So, I mean, companies have restructured, leasing companies have exited, and so the remaining companies are getting stronger. So I would say overall, both from the operating side, there's been consolidation, and there's been, the bankruptcies have cleansed some balance sheets. And then on the leasing side, yes, I mean, there's more stability in the market. There's also more stable in the leasing market because the two largest lessors don't have bank debt. And so, I mean, it's an easier situation when you don't have a covenant, situation, things like that. So there's some more stability in the market because of this.
Just to touch on the operator side, we'll go to Mirika for this question. Do you think that there's a wave of consolidation coming up on you see a lot of operators, so what's your view on that?
Actually, I don't have the answer to that, and I wanted to ask these gentlemen because the recent trend of Chapter 11, etc. Do you think that promotes the operator to say, okay, well, look, I need to stay on top of competition, let me file as well? Do you think it will promote that, or do you think I have
What's
no
similar
idea.
to what happened with the U.S. airlines when they were all filing for Chapter 11?
Yeah.
Yeah, it's hard to be the only operator that doesn't file for bankruptcy and get rid of, all your debt.
Okay.
I think on the consolidation piece, the challenging factor in helicopter operations is that they don't fly very far and they're in lots of different countries, so there'll always be probably a greater degree of regionality and smaller operators just to cope with local markets. So I think that will always be a restricting factor in consolidation to some respect.
Yeah, I think that was mentioned yesterday in one of the panels. There's, obviously if you've got an operator with 35 different AOCs, it's going to be difficult to consolidate with another one. So, okay, let's end with the final question here, which is pretty topical for this panel. Ed said that financing was limited. I think that's what you're saying, is being, well, maybe not limited, but selective. So let's hear final views from our panelists.
Absolutely, selective is the right word. I mean, we are still transacting in this space. Last year we closed 5 helicopter transactions for, it must have been in the best part of $400 million. 2 of those would have been classed as kind of refinancing, I'd say, but 3 of them were new money transactions into the market. We syndicated 2 of those as well, and we brought new lenders that hadn't been in the space for a long time, or hadn't been in at all, and we were oversubscribed on one of the transactions that we took to market. So there deals can still be done, they just need to be structured in the right way.
Okay. Andy?
Banks should always be selective. I mean, that should never
So it hasn't changed then?
No.
Okay.
So we at CIT, we still have a mandate to do lending in the space. How often we've said no, I think it's more of self-fulfilling almost, because ultimately I'm not really hunting as much in the space. So I'm not going out and calling but we've also done a few deals. We did a few deals last year and this year as well. But again, we're selective, and we're a few notches more conservative than we were before. Until the market improves and the oversupply gets out of the system, we're going to be very selective.
I guess that makes it difficult for you, Mirika, if you're looking to get some bank debt. It's going to be, you're going to have to prove your case. But any final views from you on the...
No, but, Heli Value did the presentation yesterday, but we rely a lot on their data. But at the same time, we're trying to have an in-house view of the market way more than before, and have the residual being way more conservative. So in that sense, as gentleman has used, we are selective. But other than that, we rather consider that going forward, the downturn of the market and the fact that there are used aircraft unutilized is a great opportunity for us. So we would love to welcome any operator. I don't think there's a lot of operator, that may need our finance, but I would like to, we'd like to be more aggressive this year.
Okay. Well, there you have it. I think that we can conclude on that. The financing markets are definitely not closed, but it's back to basics, back to fundamentals, and being selective and making sure the credit, the structure, the operator, the aircraft all stacks up. So join me in thanking the panelists for their very insightful views. Thank you.